Hello everyone, welcome back to the channel. The sell-off is getting sharper. The red days are becoming more frequent and I'm actually glad this pullback is happening. Not because I enjoy seeing portfolios go down, but because I've been preparing for this exact moment. For the last month, I've been talking about taking profits on short-term trades, trimming extended positions and building cash. And this pullback is exactly why moments like this are where long-term opportunities show up. So, in today's video, I want to walk you through 5 stocks that are entering really attractive long-term buy zones. Some of these I'm actively accumulating myself and others I'm watching very closely. With that said, let's jump right in. First stock on the list is Circle, and this is one of my highest conviction long-term plays. Circle is the company behind USDC, one of the world's most trusted, fully regulated, fully reserved stable coins. And stable coins aren't just another crypto product, they are the infrastructure layer for payments, trading, DeFi, remittances, and cross border transfers. USDC is becoming the digital dollar for a huge part of the crypto ecosystem, and Circle's business model is actually one of the cleanest in this space. Their revenues come from multiple sources like USDC issuance and reserve interest, transaction fees whenever USDC moves around the network, cross chain infrastructure, basically the pipes connecting different blockchains, developer tools and programmable wallets, and enterprise partnerships with fintech, e-commerce, and payment platforms. This is not a speculative meme play, this is core financial infrastructure. It's like investing in digital plumbing during the early internet era. What I'm really watching for Circle in the coming quarters is how they execute on their larger roadmap. One big piece is expanding USDC to more blockchains because every new chain increases liquidity, usage, and developer adoption. They're also working on variable interest USDC, which would let users actually earn yield on their stablecoin, and that could be a game changer for mainstream adoption. On top of that, Circle is building programmable, embeddable wallets that developers can plug directly into apps, making USDC transaction feel as seamlessly as using Apple Pay. And of course, regulatory clarity is a huge catalyst here. The moment the US sets clearer rules around stablecoins, adoption from institutions and fintechs will accelerate dramatically. Circle is also deepening its institutional partnerships and continuing to build a more diversified revenue model, not just interest income, but transaction fees, software services, and infrastructure products. All of these pieces together create powerful long term catalysts that can significantly increase the value of the business over time. And technically, the stock is sitting below all major EMAs on both the daily and weekly charts, which is exactly where I like to accumulate long term positions. The entire crypto sector is in a pullback right now, but once that settles, I see Circle easily getting back above $100. This is a long term buy for me, and I'm building my position slowly through this weakness. Moving on to the second stock in the list, which is E.l.f. Beauty. I actually traded this one earlier in this year, bought around $70, sold at $140, and walked away with a clean 100% gain. Now the stock has come back down and is sitting right back at $73. And technically, it's in a spot I really like if you are thinking long term. Here's what I'm saying: it's trading below all major EMAs on both the daily and weekly charts. The RSI has cooled off significantly, and the next major support zone sits around $57. And now, stepping back from the charts, the business itself is solid. E.l.f. has been one of the biggest disruptors in the beauty space. They cracked the code with affordable pricing, high quality products, and social media driven marketing. Their brand is everywhere, like TikTok, influencers, Gen Z, and that momentum is what pushed the stock so higher earlier this year. But after their recent earnings, I did update my valuation model. Their long term expected annual growth rate dropped from 16.2% to 6.3%, which naturally lowers the long term upside a bit. That said, it doesn't change the near term opportunity. For me, anything below $60 becomes a really attractive level to start a new swing position. And once sentiment turns, which it always does for strong brands, I can easily see E.l.f. making its way back toward $90 within the next year. Alright, now moving on to the third stock on the list is Block, or as many still call it Square. Based on my model, Block has 3x upside potential over the next 5 years, and if they keep executing the same way they have been, I can see this name pushing towards the $230 range because Block is not a simple payments company. They have built around two massive ecosystems. Number one is Square, which is their bread and butter platform. This powers point of sale systems for millions of small and mid sized businesses, restaurants, retail, and services. If you have tapped your card at a local business recently, there's a good chance it was through Square. This ecosystem is sticky, it scales with merchants, and it's incredibly profitable. And second one is their Cash App. Cash App has evolved into a full financial ecosystem: payments, peer to peer transfers, banking features, investing, and even Bitcoin exposure. It's extremely popular among younger demographics and continues to grow rapidly. When you put Square and Cash App together, you get a fintech flywheel that becomes harder and harder for competitors to replicate. That's the beauty of blocks model. One side feeds the other. And financially, they are in a very good shape. They have cash of $13.96 billion dollars, cash equivalents of $13.58 billion dollars, total debt of $8.1 billion dollars, which brings their net debt to negative $19.4 billion dollars, which is fantastic. And their free cash flow is $1.83 billion dollars. This is a very healthy balance sheet with no liquidity concerns, no red flags. And what really catches my attention is the technical setup. The stock is currently below all major EMAs on both the daily and the weekly charts. And historically, those are the moments when long term investors get the best entries, not when the stock is running hot. So for me, this is a buy, and I'm adding block to my portfolio at these levels. And the next stock in the list is C Limited. This stock has been beaten down over the past year, but if you look closely, the technicals are starting to set up beautifully. Right now, C Limited is trading below 200-day EMA on the daily chart and below the 50-day EMA on the weekly chart. And the daily RSI is oversold and beginning to show early signs of a reversal. So, from a technical perspective, this is exactly the kind of spot where you typically see strong swing setups from. But the business itself is what makes this even more interesting. C Limited is built on three major divisions. Number one is Shopee. This is the dominant e commerce platform in Southeast Asia with massive scale and massive growth. And the second one is their C Money. This is their digital finance arm, which is quickly becoming a key profit driver. And the third one is Garena, is their gaming division, which has slowed down recently but still has potential to rebound. When you put these three segments together, you get a very diversified tech ecosystem: e commerce, fintech, and gaming all under one umbrella. And the balance sheet, honestly, it's rock solid. They have a free cash flow of $4.27 billion dollars, total cash of $5.13 billion dollars, cash equivalents of $9.9 billion dollars, total debt of $4.24 billion dollars, which gives the net debt to negative $10.8 billion dollars, which means they are sitting on a strong net cash position. Among its peers like Mercado Libre, PDD, and Grab Holdings, C Limited is the only one that screens as undervalued right now. And Morningstar fair value estimate is at $198, and the stock is trading well below that level right now. So for me, C Limited checks two boxes at the same time: a high quality swing trade setup and a strong long term entry point. If the broader market stabilizes, I can easily see this one pushing back towards the fair value over the next 6 months. And finally, the last stock in the list is Sprouts Farmers Market. Sprouts is a specialty grocer focused on organic produce, healthy foods, and private label expansion. They are not trying to be Walmart, they are dominating the health conscious space. Strong brand loyalty, clean balance sheet, and consistent free cash flow. This is the kind of stock that dips hard during fear but recovers steadily because the fundamentals are solid. If you are a long term investor, this is simply a great entry point. Price is below every major EMA on daily and weekly. RSI is oversold below 30 on both the time frames, and my model shows 114% upside in 5 years. So definitely keep this in your watch list. And finally, these pullbacks are where long-term wealth is built, not during all-time highs, but when fear kicks in. I'm personally accumulating Block, Circle, and likely C Limited and waiting for E.l.f to go below $60. Let me know which ones you are watching and whether you want deeper breakdowns on any of these. As always, stay patient, wait for the right opportunities, and invest mindfully. Thanks for watching, and I'll see you in the next one.